So that's another stock that you would have on your radar. But we have our next guest now joining us, Mahesh Patil, Co-Chief Investment Officer at Aditya Birla Sun Life AMC is joining us. Mahesh, good morning. Thanks a lot for joining us. This month has been very strong for the broader market. The mid-cap index is up 8%. The small-cap index is up 10%. Your thoughts on whether this repairing of the portfolios that we have had for last 2 months after that March damage has still some room, or do you think now the market's once again reaching stage where it's vulnerable?
Yeah, so I think clearly, the sharp fall what we saw in the March, brought down everything, right? The large caps also and the so-called stocks, quality stocks also corrected. And you see the good bounce back since then. Initially it was the large cap names and the frontline stocks which bounced back. But I think as the market globally also we've seen that there's been significant rebound and there's a confidence that the market is kind of bottoming out. So we have created a bottom of what we saw in the month of March. That's the general feeling. And as coupled by the strong fiscal response and the monetary response by the central banks and the governments globally, there's a hope that you should see a recovery much faster than what we had anticipated earlier. And that has led in the recent past, we have seen the last 1 month or so, as you rightly said, we've seen the market breadth has started to broaden a bit. And that's a good sign. When the market breadth starts to broaden, that means you would see the things starting to bottoming out. And if you look at the Nifty equal weight index, that's a good indication of seeing how the breadth is, or even the equal weight BSE 200 index. That started to outperform the normal Nifty. And I think that is also a reflection of the fact, to some extent, that we've seen the retail participation being fairly good in this period. Globally also we've seen a lot of retail investors probably sitting at home trying to dabble into the market, and retail volumes have surged like anything. And that has also led to the wider breadth and participation of the mid and small caps, what we've seen in the last 1 month or so.
Okay. Well, Mahesh, good morning. What about flows at mutual funds? We did see a little bit of waning of flows when the numbers came for me.
Yeah, that's true. Numbers. I think what has happened is that as the markets bounce back from low, bounce back almost 25% or so, we've seen some amount of profit taking recently at the end of the month, May month, and some redemptions were there. The SIP flow has been steady. There has been a marginal dip in the SIP inflows in the month of May. But yeah, you're right. The overall inflows have now come down to a level of around 4,000 crores on a monthly run rate. And at least the indications for this month are also a bit tepid. I think a lot of retail money is probably going directly into the market here. We've seen the turnover for a lot of the brokerage houses on the retail side. We've seen a lot of new opening of accounts happen in the last couple of months. So I think some amount of money is going there, but I think this is a market to buy on dips. And wherever we see a correction in the market, days where there's a large correction, we see good inflows coming into the mutual funds.
Okay, all right. Well, for now, the market is slipping some more, the headline index that is. So the Nifty is now down almost about 70 odd points, and the Bank Nifty is down 256 points. So even the advanced decline ratio is actually worsening a bit. Mahesh, hi, good morning. I was going through your some of your funds and just looking at your frontline equity fund. You have a large presence in some of these consumption names, whether it's autos like Maruti, whether it is FMCG like Dabur, or even something like a Crompton Consumer Electricals. I wanted your thoughts here. Do you think consumption as a space will pick up? And if yes, what are the specific pockets that you would be interested in now?
So we were right. We have been positive on the consumption, not specifically FMCG, but generally small ticket consumer discretionary also. And there are a couple of things I think in this current environment, while high ticket consumer discretionary is got impacted and will take time, but basic consumption I think will continue to grow. And what the government has done in terms of passing some money at the end at the bottom of the pyramid we've seen for basic items, the consumption demand has been fairly steady. And that is why we like the consumption stock. I think they are expensive at this point in time. But what we see is also the cost of equity has come down, right? The risk-free rate has come down. To that extent, I think one can justify a slightly higher valuation for the consumption stock. And this kind of environment where there is still about uncertainty in terms of how the demand will pick up, we like this stock from a longer term perspective. Obviously, we don't see very large returns in this deal. But on the other hand, the consumer discretionary names, like for example, whether it is the auto sector or whether it is in the consumer durable space, there we see demand revival coming back, say in the second or third quarter. And there it is much of a structural story there, especially in consumer durables, where the penetration levels are still fairly low. And we're seeing some of the larger players over there benefiting during this crisis, gaining market share from the unorganized sector. So that trend will continue. And in the auto sector also, I think we are seeing last 2 years, 1.5 years has been pretty weak. Volumes have been low. We have gone through the BS6 transition. And also post this crisis, the move towards from shared mobility to personal mobility, I think would put a decent revival in the sector. And again, some of the leaders there have got strong balance sheet, good cash flows. So I think they should be able to come back to profitability much sooner. And many of these companies have got a lot of work on the cost side. We have seen they're able to bring down their cost. And despite the volume growth being slightly weaker, the margins are fairly intact.
Okay, I wanted your thoughts on the pharmaceutical space. We've had a 40% index rally over the last 3 months. It's easily been the best performing index. You reckon this is just the beginning? Could we have a multi-month, multi-year pharma bull market, or I think most of the good news is now in the price?
The pharma sector, no doubt, I mean, it's performed significantly in the last 3 months, especially after this crisis. But if you go back, the pharma sector had a pretty prior to last 6 months, 3 years it's underperformed big time. You see the big derating in a lot of the large pharma names, especially which are exporting to the US market. And I think if you look back now, there is obviously good traction on the domestic pharma side, but also on the US sales, we've seen a lot of issues which were hindering that in terms of the pricing pressure, in terms of approval for plants. All these things have eased off. And a lot of companies, large companies which are invested into R&D over the last 3, 4, 5 years are seeing the benefit of that in terms of new products coming to the market. So we see a steady growth there in some of these pharma names. Arguably, their valuations are now probably fairly priced, all these stocks. But as we think it's going to be not just a 1 year report, but more of a multi-year kind of run in the pharma sector. And then the domestic pharma is like akin to the consumer space, okay, where we are seeing volume growth of around 10 to 11%, reasonable price increase on a yearly basis, good cash flow generation, high ROC. So I think it's a more of a longer term view on pharma at this point in time. Obviously, if we see a cyclical rally in the market, the pharma sector could underperform, but on its own, I think it has more legs to continue to deliver good earnings over the next few years.
Yes, they have to deliver more than just earnings, isn't it? At the moment, we expect them to deliver us from COVID as well. Thank you very much, Mahesh Patil, for joining us with your thoughts this morning. The markets have not moved much in the past 15 minutes. A bit